channel. I know it's been a little while. I mean, that's what happens. Work gets busy, the videos suffer. It's unfortunate, but we're back. And here's what we're going to do, all right? We're going to do some TA today. We're going to go over some Bitcoin on-chain metrics. We're going to go over Bitcoin chart analysis and EGLD chart analysis. We're just going to stick to that. We're going to see what we see on the charts, try to keep the video short. Now, there's a lot of stuff going on in the world. So what I did recently is I created a Substack. This is a platform that allows me to release podcasts and news articles, basically, that I write myself, and it allows it to only go to the people subscribing. So make sure you look in the description and subscribe to my Substack, because I'm going to have a podcast coming out soon where I go over what I think is happening in the world and how that's going to impact markets. And that's going to allow me to keep this video short because I'm not going to sit here and talk about that the entire time. So let's go ahead and get started with the chart analysis. Make sure you like, make sure you subscribe, make sure you look in the description for my Twitter link, follow me there, and to the brand new Substack, make sure you subscribe there. All right, let's go ahead and do this. All right, we're going to start off with crypto quant and looking at the exchange reserves. So I've told you guys a lot about exchange reserves. I will very briefly go over it with you one more time, all right, in about 10 seconds. So what this is, when exchange reserves are basically the liquid supply of Bitcoin. That's the amount of Bitcoin on exchanges. The illiquid supply of Bitcoin is essentially the inverse of this. That's the amount of Bitcoin that is not on exchanges, but on cold wallets or, other forms of cold storage or, just personal wallets. So what we are seeing now is that throughout this entire bull run from March 2020 to now, the exchange reserves have been dropping massively. Well, let's compare this to what happened in 2018. So the 2018 bull market, we saw the price of Bitcoin go from $900, much less than that actually. If you go back further, it was like at $300. So you see the price of Bitcoin go from there all the way up to almost 20,000 at the end of the year. Well, what happened with the exchange reserves in blue the entire time? The exchange reserves kept rising. So when the price topped out, there was so much more Bitcoin on exchanges that Bitcoin started to get sold and the price crashed very, very quickly. Okay, so this was that bull market. Then we saw after that the exchange reserves kept rising just nonstop. Even when we had a bullish phase, exchange reserves kept rising. Now, since March 2020, we have seen the complete opposite. We have seen price keep rising exponentially and the exchange reserves dropping exponentially. And we are still seeing that happening now, even as we're at all-time highs. I mean, if you just look here at where the price is now, so this is where the price is now, right? And compare that to the exchange reserves. Well, you see what's really happened. I mean, these are all areas where, I'm going to get the ruler out so you can kind of see this. All these different areas where this line intersects is where the price was at the same level. So this is where the price was the same here, price was the same here, price was the same here, price was the same here. So this is where the current price was the same historically. Now what's interesting is if you look at each of these points and you go down, right? So if you actually do a couple of horizontal lines or a couple of vertical lines. So we'll do one here, we'll do one here. Okay, we'll even do one here. Okay, so we have a couple of them put on. So let's put this one on and let's put this one on. So this is very simple. All we're doing is looking at the exchange reserves compared to where the price was. So at this point here, exchange reserves were basically when the price was the same as where it is now, exchange reserves were here. So if you take from this point down, you can see that the amount of Bitcoin on exchanges is down by 87,000 Bitcoin from the time that we were at the same price in February 2021. Now we look here at this level. Well, this is May 2021. Bitcoin was at the same price it is now, and we are down from there about 156,000 Bitcoin. I mean, 156,000 Bitcoin, I think you're talking like $6 billion. I mean, let's do the little math. 156,000 Bitcoin, multiply that by the price is around 42,900 right now. Yeah, 6.692 billion. So what that's telling us is just from May 2021 to now, the price is the same, but there is $6 billion less worth of Bitcoin on exchanges. This is pretty interesting because anytime you look at this and you look at these historical points, the current supply on exchanges is down. This is absolutely the opposite of what we saw in 2018. So I think that this is going to react the opposite. I think what's going to happen is when price goes up, we're going to keep seeing the exchange reserves go down unless something fundamentally negative happens for Bitcoin and cryptocurrencies. Okay, next we're going to look at the NVT ratio. NVT ratio is pretty simple. That's the network value to transaction ratio. It's basically the price to earnings ratio from traditional equities markets. It's a way to calculate it with Bitcoin. And this is a very clear and simple chart. This is where we are now. The blue dashed line correlates with that. If we zoom out and we look at that blue dashed line going across, well, what you can see is that even right now, we are essentially at what I would consider to be lows, right? These are lows. These are very, very massive lows. Going back historically, this blue line has served as lows. So that tells me network value to transaction ratio is telling you how well the network is valued by market cap. And right now, well, it is not valued by market cap very well at all. It is significantly undervalued. Super interesting, because I think that means that this bull phase has barely even started. I would expect the NVT ratio to be up here if we are at a point where, you know, Bitcoin is starting to get massively overvalued. We're not even close to that. Okay, and then we look at the reserve flows. I've showed this to you a couple of times. This is pretty interesting too. This is basically comparing the miner reserves to the price to the exchange reserves, okay? So what you're seeing in red are the exchange reserves. What you're seeing in blue is the Bitcoin price. And then in orange at the bottom, you're seeing the miner reserves. So very simple to understand this chart. Exchange reserves keep dropping. Price is consolidating. More than likely, we're going to have a pump. That's what I'm hoping for. Well, at the same time, the miner reserve is now moving back up. Miners did look like they sold off a little bit back in early January or late December, and that led to the drop, or that helped the drop from around 40K down to 27K. And now we are in the complete opposite situation, where since January 2021, miners have been in full accumulation mode. That's all they've been doing. Miners are not selling right now. So that's very, very bullish, because that shows you that, you know, sell pressure is going to be much lower. And you can kind of see this in one other place. That's the PWEL multiple. So this is kind of telling us the miner profitability ratio. So what you can see here is that the miner profitability ratio in blue, the PWEL multiple, is actually showing us that basically right now it is also at lows. So miners selling right now are not going to make a significant profit. And what's interesting about that is that, you know, that shows us a couple of things. You compare all of this stuff, and what you see is the amount of Bitcoin on exchanges dropping, miner sell pressure dropping. You see network value to transaction ratio being severely undervalued. On chain, I don't think things could look much better. So I'm enjoying that. Let's go ahead and move on. We're going to look at the Bitcoin chart now. So we're going to actually switch our view, and we're going to pull up the chart. Okay, so the Bitcoin chart, pretty interesting. You've seen before, we were looking at a couple of things, all right? If you had been following me on Twitter, you know that we had a triangle down here. We were predicting a breakout to 45K. We basically predicted that like masters, and it worked out great. Now what we are seeing is, this is the daily chart for Bitcoin, all right? So there's a couple of things. We still have our key support here. This line actually correlates with the resistance that we had on that ascending triangle that we were looking at that we broke out of. So there's two things that I'm seeing, right? If you look at this on a longer time frame, well, what you see here on the right is the VPVR. This is the volume profile visible range. It tells you the amount of volume at certain prices in the visible range. So what we want to do is zoom out a bit to include a larger visible range. Now we see more volume for that visible range. Now, basically what this is telling us is that between 39,000 and around 41.4, we don't have a massive amount of volume. So that tells me that if we were to drop below 41K, that going down to 31K is entirely possible. And 31K or 30, I'm sorry, if we were to drop below 41K, going down to 39K is entirely possible. And 39K ends up correlating as the resistance in that ascending triangle that we broke out of. So basically, if we come down to 39K, that's not really a bad thing. That's going to reset RSI, and that's going to let us bounce off of a previous resistance. So that's one thing, but we have to keep in mind another thing, all right? Bitcoin does something, Bitcoin does something very, very consistently, right? When it goes from a bear phase to a bull phase. What you end up seeing is that we break out pretty high above the 20 exponential moving average, which is that blue moving average you see there. And then we end up retracing and bouncing off that moving average. Historically, this happens all the time. When you go into a bear phase, it's the opposite, right? You start dropping and getting resistance on that moving average. Bull phase, you start rising above it and getting support on it and bouncing off of it. Well, what are we seeing now? What we're seeing now is that we were below it throughout this entire bear phase, and now we have broken above that 20 exponential moving average, and we're actually getting very close to it to bounce off. So what I could see happening here is if tensions rise with Russia and the Ukraine, I could see a possibility of us coming down and bouncing off of this at around 41,000. If we lose this, then I'm looking at around 39K as our bottom, and this range here between 39.5 and 40,200 as our key support. So basically, these are the areas I'm looking at. And if we look here, why am I looking at this as the key support? Well, if you zoom out and look at this area, what you'll see is that this little triangle correlates with the top of this massive volume profile. So this is really where we want to see our key support to keep us bullish. But if we start touching this yellow line and flirting with that prior resistance and falling below it, that's not really a great sign. So I don't necessarily want to see us drop below 39,000, but anything at that range, I'm okay with. Right now, what I would expect in the short term is just a lot of volatility as we're getting more news into what's happening in Russia. And we'll go over that on the podcast. We'll talk more about it. I'll kind of give you my thoughts on the whole situation and what I think might happen, and also what I think may be the reaction of markets to whatever will happen. So we'll kind of go over everything, and, we'll just use it as a good opportunity to discuss the news. Okay. That's the main thing that I think we need to focus on right now. I think we need to focus on that 20 exponential moving average, and we need to see how we react with it. But everything is very hypercritical based on what's happening in the world. Okay, I haven't drawn too many other trends here. I mean, you could very easily draw additional trend lines. And for example, I mean, there's one very key one here that I've been looking at. If you just take a trend line on the resistance we saw when we went down, well, now you have a very interesting trend line, and you see that we're actually getting support on it. So this trend line, and I'm going to hide this one so it makes a little more sense to you. We'll even hide the key support. Okay, so this trend line, very simple to understand, right? When we were in that ascending triangle moving up and we were getting resistance this entire time, right? Pretty much all of January, we were getting resistance on this trend line. Now, this trend line is acting as a support. So if we were to bounce off of this trend line, that's a very good thing as well. So I think all of these are important. We want to see us, if we bounce off this trend line, very bullish. If we come down and touch the 20 exponential moving average and bounce off, very bullish. So a bounce anywhere between 41,400 and 42,200 is very bullish. If we come down and hit the $40,000 mark and start dropping into this key support, still not bad, but once we start hitting this yellow line at 39K, that's when things would be a little dicey to take us back down there with the amount of accumulation we've had already. Keep it all in mind. I think it's very important to be looking at these trend lines and to be looking at what's happening in the news, because the news could impact all this instantly and none of the TA matters at that point. So keep it on your radar, both sides, right? Keep the charts on your radar so you have some buy and sell targets, and keep the global macro news on your radar, because that's really going to affect everything. And make sure you subscribe to my Substack once again so you can listen to the podcast. I'm going to try to release that either today or tomorrow, do a little bit of research, put some topics together that I want to talk about, and then we'll record that. Okay, so now we're going to move on to EGLD, all right? And with EGLD, we're seeing a couple of interesting things. The first thing that I want to show you is this, okay? Let's, I'm going to add the Bitcoin chart here, and we are going to show this, yep, by percent. Now what we're going to do is we're going to get rid of our regression lines, we're going to get rid of our Fibonacci, and we're also going to get rid of our moving averages. So this is a very simple thing to understand. What you're seeing in orange is the Bitcoin price, right? And what you're seeing with the candles is EGLD. Now, what this is showing us is over time, right? EGLD has actually outperformed Bitcoin since 2021, right? Since 2021, we have actually been using Bitcoin as a support. If you look here, when we went up this high, we bounced off the Bitcoin price, like the percentage, right? So we have been kind of bouncing off of that throughout this entire time. And then we had a massive run up when the rest of the market was not doing the same thing at the same percentage. And now we are consolidating. So if we look at this at that longer term, right? We are basically at a point now where we are consolidating. And can we come back down and bounce off of this trend line? It's a possibility. That would take us back to the lows we saw before this run. But I don't think that's going to happen, because I think what's going to happen is we're going to see Bitcoin rise and both of these kind of stable out again together. And then we're going to see them move in tandem, or we're going to see EGLD jump much higher. So this is kind of one interesting thing, because it kind of shows you that EGLD has actually been relatively stable in comparison to the rest of the market. It's kind of funny. It's just had so much high appreciation that it's had high drawdowns. Yeah, that's expected. High volatility to the upside can always lead to high volatility to the downside. Okay, so that's one thing I wanted to show you, just to kind of get it on your radar and get you to start looking at it. And it gets a little interesting when you start zooming into it too, because the time frame matters. The time frame shows you the different correlations during that time frame as far as percentage moves. So even if you're looking at July 2021 to now, well, EGLD is still outperforming Bitcoin percentage-wise. So still very interesting that it's actually been a solid investment from that perspective if you've been in it for an extended amount of time. I mean, obviously, if you bought anywhere between 300 and 500, right, then you're down right now. But I still don't think that's reason to believe that we're not going to go up past those areas. Okay, so what we are going to do now is we're going to get rid of Bitcoin. We're just going to look at this chart. Okay, so if we are looking at our EMAs, we are getting our regression lines on, and we switch back to log. All right, here we are. So one thing that's interesting is that when EGLD dropped, it seems to have bottomed out at the bottom of this regression channel. Now we are moving up, and we had a massive buy yesterday. This candle was ridiculous. Dude, this was like a very quick candle, and it took the price from like 175 all the way up to 270. Someone bought a boatload of EGLD. Now, this is an interesting thing, right? A lot of people talk about this. Why would someone come in and buy so much EGLD? Well, people would come in and buy so much EGLD as they discover it. I mean, I think that this asset is the best layer one out right now, right? And it has the best market cap for gains. So coming and seeing people put 150 Bitcoin or 170 Bitcoin into EGLD doesn't surprise me. And seeing the price move like this also doesn't surprise me because of the supply. The supply has been getting drained off exchanges for so long. You know, even though that we had Binance refill and things like that, the supply is still dropping consistently over time. That's why they've had to refill the exchanges. So coming in and seeing a huge buy to accumulate a scarce asset and that driving up price rapidly when it's at a low market cap, none of this should shock anybody. I think we're going to see more things like this happen because of the fact that people are going to want to buy the asset as they realize the utility, as changes keep being made to increase the utility. We know that Elrond is about to add more utility to MEX, and that's going to be very good because I think that's something that the community has wanted, and it's going to work out really well for the people that have been just accumulating locked MEX the entire time and haven't. I mean, I have not unlocked any of I unlocked my locked MEX once early on. Right? The first unlock. Since then, I haven't unlocked anything. So I have a bunch of locked MEX that I can unlock into MEX, but I'm not doing it. I'm just staking it. I'm just earning because I know it's going to have more utility in the future. I mean, look at the DEX that was built. You know, look at the progression of where EGLD was from ERD to now. Mainnet launch, feature launches. The DEX, honestly, it's like enterprise level, you know, when it comes to just a UI, it's better than everything. I don't like using other DEXs now because they don't compare. And then on top of that, the Maiar app. It's like the best mobile wallet, especially for linking. You can see your NFTs there. Like they have put DeFi in a different stage now. And I think what's going to happen is as people start to discover this and come over to Elrond and see how good everything is, they're not going to want to go back to other DeFi exchanges. At least I don't. And I don't think others will want to either. So I really think that as we see more features and more utility coming to the DEX and more pairs coming, we're going to continue to see more people coming. The problem is that we have a scarce asset. So the price of EGLD will likely rapidly rise with small amounts of adoption, right? You have 100,000 users come on, and suddenly if each of them wants one EGLD, that's a lot of EGLD leaving exchanges, right? So this is a very interesting thing with a scarce asset, and it's part of the reason, in my opinion, that we have seen EGLD go like this. We've seen it go massively up, and this to me does not look like a chart that is nearly completed yet. This to me looks like a chart that just hit a long-term bottom and it set a new trend. I mean, if I have to look at a trend line right now for a bottom, that's what I'm looking at. I'm looking at a trend line like this, and we just bounced off of it. You know, can we come back down and touch it again? Sure we can. But if we keep using this as a bottom and moving up, well, I still think that there's a very good possibility that EGLD goes into the thousands, because if adoption rises like that, what you're talking about is a scarce asset, and you're talking about a platform that a lot of people have already found that once you start using it, you don't want to use other ones. So there's a lot to keep in mind there. Now, another thing that we're going to talk about is something that we looked at on the Twitter, and we've looked at it before on the YouTube, is this golden pocket. All right, this golden pocket area is from 195 to 210. And I told you on Twitter not long ago that I think we're going to be trading in this range very quickly, and people aren't going to expect it to be that quick. And here we are, right? I think I said that like 4 or 5 days ago. So here we are, we're trading in this range. And basically what's interesting about this is that the moving averages are all getting constricted in this range, right? You're seeing all the daily moving averages come into this range. What I would love to see is I would love to see the price trade sideways like this for a while between 195 and 210. If that could happen and our 20 exponential moving average goes like this, and this moving averages go like that, these moving averages go like this, and then we start having kind of an inflection point in early March, like right around here, well, I think that we will be so constricted in price in this golden pocket that we will have a massive breakout and trend reversal and go right back up to the 240s, 250s. I would see once we break out of this golden pocket, I'm not really expecting massive resistance until we have hit 240, because long term, 240 is where we have our resistance, right? Our resistance right now is in this 205 area in the golden pocket. So I want to see us put more volume into there and then just have a nice breakout and trade between 240 and 220 for a while, put more volume in until we move out of there. And we're just basically allowing people to, we're basically allowing, by stopping and consolidating and moving sideways in these areas, we're allowing weak hands to sell, we're allowing strong hands to accumulate. You know, if it wasn't for moves like this, I would not have been able to buy EGLD here at around 130. I wouldn't have been able to buy EGLD here at around 50, right? Like around $54. So I love it when things consolidate, because when they consolidate, yeah, I mean, it sucks to see your portfolio go down, but it allows you to dollar cost average and accumulate what you want to accumulate at good prices. And that's going to effectively make your portfolio worth a lot more in the long term. And I'm a long-term investor. So it's kind of what I'm looking at. Keep a close eye on that 195 to 210 area, because if some new news, when the news comes out from the Elrond team about the MEX utility, well, I think seeing that move up and that bounce up to the 240 area, very possible very quickly. It depends what the utility is. I've seen a lot of ideas from a lot of people on what they think that utility is going to be, and I think any of them can be right. People have a lot of great ideas. You know, I don't really know what it's going to be. I'm going to brainstorm and try to come up with some thoughts on what I think it could be. How would I give MEX a lot of utility? And maybe then try to get you know what I'll do? I'll write that down and try to come up with a few ideas, and I'll talk about them with you in my podcast. So make sure you check out the Substack link and subscribe to that. All right, you know what? Even without going over all the news, we still kept it at 20 minutes. Can you imagine if I'm not planning to do this podcast, this video would have been like an hour long. Well, anyways, 20 minutes of TA. I think that's good. I think for right now, for EGLD, very key. If Bitcoin draws down, look at around 170 as being a potential bottom. That's the 20 exponential moving average on the daily. And I think it's very possible that we retrace and bounce off of that, because in every bull phase, that's what EGLD does. Very similar to Bitcoin. It moves up past the 20 exponential and then draws down and bounces off of it, moves up, draws down, bounces off of it. Sometimes even the 50 exponential when it's a longer bull phase. So I don't see any reason why if Bitcoin doesn't have a drop that we don't draw down and bounce off the 170 area. So I actually still have a buy order open at 160, but I think I'm going to move that up to 170, maybe 175, right? I don't know. I mean, maybe it would trigger at 160, but I don't want to risk it. I'd rather just put it at a price where I think it's more likely to hit. And I think probably 170, 175 is more likely as a bottom now if we retrace. And retracement's very possible, but it's also very possible that we go up to 210, put in more volume between 210 and 205, and then at the same time, the 20 exponential keeps moving and our bottom becomes 180. So things can change rapidly. Keep an eye on them. Hope you enjoyed this. And I don't think there's anything else left for us to go over except for one thing. All right. Keep your stress levels low. Keep yourself informed. There's a lot of good TA on Twitter. There's a lot of good TA on YouTube. Not just me. I try to share people's TA that I think is good too. So check my Twitter. You'll see a post on there that was posted yesterday that I think is really good. You should check it out and make sure you just absorb info, deal with the stress. Go work out, walk your dog, enjoy nature a little bit. These markets and charts and stuff, they're not everything. All they are is a small piece of your life. An important piece in the sense that you're trying to build financial wealth. That's a good thing, but you're not going to take any of that wealth with you when you're gone. So enjoy some of the other things in life. All right. Do that. I hope you have a great weekend. I will see you guys on the Substack, the podcast, and the Twitter. I'll catch you all later. Thank you for joining me. Peace.